Good morning, Jayaram here. Welcome to Almus Market Mornings. We are into that period of the year where liquidity is low, but volatility is higher, and that was reflected on last Friday itself when we had markets in US succumbing to selling pressure and currencies moving big time on the reverse side. And it was also a triple witching day, which is last third Friday of the month of December, when a lot of options expire and a lot of futures contracts also expire. So it contributed to the volatility. Apart from that, continued uncertainty about the impact of Omicron also playing its part to bring down the stocks. Pfizer, in fact, said that the pandemic would extend through the next year, and some of the European countries are again looking at more restrictions and even lockdowns in some countries. Anyway, it is also end of the year, so profit taking is a guiding factor for many positions. So that was the factor behind the stock market. On the currency, on the dollar, we had German IFO index, which came lower than expected, and that was the sixth time it has come lower successively. It has not happened for a long time. So people assume that ECB will continue its dovish stance despite its decision to gradually reduce the pandemic emergency program. Euro almost lost the entire gains it made in the previous sessions. For pound also, which was the another big mover, we had a lot of political news. The ruling party lost one of the key by-election, and one of the key ministers also resigned. There's a lot of uncertainty about the leadership because the ruling party itself is pressurizing Boris Johnson to establish his leadership, without which there can be some problems for the political stability. So pound gave up all its gains despite a surprise rate hike by the Bank of England on Thursday. Commodity currencies obviously lost because oil and other commodities fell. And we also had news of the new spending bill of Biden possibly not going through, at least for now. So that's another thing that the market had to contend with. It was a risk-off day, so the yields also came down, and dollar was higher. For the rupee, we have continued to see selling by exporters above 76.20, taking advantage of the multi-month highs. At the same time, we do not have an indication that the trend is reversing. Short-term looks a bit overbought. That has been correcting. It can correct both in terms of price as well as in terms of time. In terms of price, it can correct down to 75.80 or extend to 75.60. It depends on the flows. At the same time, upside 76.30 can hold well, because in these illiquid conditions, RBI may not allow unnecessary volatility to creep in. So for the coming days in the year, I expect 75.60 and 76.35 to hold the market. For today, we should be in 95 and 15 range. That is 75, 95, and 76, 15 range. Thank you.
Thank you, JK. This is Pankaj. So I begin with China. China today morning cuts their benchmark loan prime rate for the first time in last 20 months. 1 year rate had been reduced by 5 basis to 380, which shows that central bank willpower to prop up the economy in even a higher inflation scenario globally. and they have kept 5-year rates unchanged at 465. Bond markets are currently not buying Fed's view on US interest rates, whereas the dot plots indicated median rates around 2.1% in next 3 years. Markets believe that these rates will peak out between 1.4 to 1.7% in 3 years. US Treasury yield continued to dip lower due to continued virus resurgence. 10-year USD at 1.38%, whereas the 2-year is dealing at 0.61%. Gold holds as of now above $1,800 per ounce on Omicron fears. Indian net direct tax collection is robust during this year. They are in first 9 months, means basically up to December, they are up by 61% to 9.45 lakh crores. Much better than estimates also. But government fiscal deficit would be more dependent on how they takes their divestment program for here on. Another important thing I just wanted to indicate is Turkish lira has now weakened to 16 point above 16 per dollar against it was 7 in the beginning of this year. So it's more than a double the rate. And the recent round of weakness in lira has come because of a prime minister comments that religions also demands lower interest rates. So that's the overall market. Today morning, Indian equities market are also weak. We are in Nifty, we are already 270 points down, dealing around 16,700. And dollar rupee as of now indicating opening around 76.0910. That's all. Thank you. Have a nice day.